If you're thinking of buying a property and you're planning to borrow some money to do it, you might be wondering, should I just go and talk to my bank or should I go and talk to a mortgage broker? Do mortgage brokers charge for consultations? What's my next step? So if you're in that position, today's podcast should be of interest to you because I'm talking to Kieren McAlester of GMC Mortgages, who's been a mortgage broker for many years, and we're going to talk to him about the best approach for first-time buyers, people trading up, people trading down, and people living abroad and buying in Ireland. So my big thanks to Kieren, and my thanks to you, as always, for listening. And the first thing is first-time buyers. Kieren, can I just ask you, let's say I'm a first-time buyer and I want to borrow, myself and my partner want to borrow $350,000 to buy a house, and I've always banked with a bank, let's say it's AIB or Bank of Ireland, since I was in college or since I got my first job, and they're offering me a loan.
Yeah.
And someone says, oh, you should talk to a broker. And I think, really, should I talk to a broker? You know, if my bank's prepared to give me a mortgage, what kind of savings am I likely to make by talking to a broker on a loan of that? Is it really worth going through all the hassle of the paperwork, or is it definitely worth going through?
It's definitely worth your while. Okay. We won't waste your time.
Right.
If we can't save you money, or you've already achieved the best rate available, or the higher loan amount, your own bank is restricted on their products and their interest rates.
Right.
Okay. So, for instance, if you were a lifelong customer of Bank of Ireland, a lot of Irish people would say, oh yeah, it's easier, they've got all my statements, they've known me since I was a student or whatever, be that good or bad. And they have my current account, they have my credit card, my father's mortgage is with them.
Yeah.
Irish people show loyalty to their own bank.
Yeah.
Okay. Bank of Ireland have got the highest variable rate on the market.
Right, okay.
By about 1%. Okay.
Okay.
And yet there's still people come into me, I'm happy with Bank of Ireland. They have a cashback offer in place, but that disguises the fact that when you come out of that, if you're on a fixed rate for 2 or 3 years, you come out onto the highest variable on the market, and it has been like that for quite a while. So there definitely is value to it.
Right.
Like myself, we don't charge a fee.
Yeah.
Banks pay us for our business. If we can save you €40 or €50 a month, or even €25 a month on your monthly repayment, that works out a lot over the term of the mortgage. You could save up to, I suppose, 0.2 of a difference in your repayment.
Yeah.
That could save you about €12,000 over the term of the mortgage.
Wow.
And 0.7 could save you about €40,000.
Wow. That's really significant.
So it's a significant savings.
Right.
And it's important that you review your mortgage over every couple of years, every 2 or 3 years. You sit down and you see, can you get a cheaper rate with your current lender? Or is there a refinance package available with another lender?
Okay.
Who potentially could give you a cheaper rate, cover your solicitor's fees, so at no charge to yourself. I think the majority of people, they don't want to go through the whole process of getting all the documentation
inertia
again. You know, people shop in different supermarkets to save €30 on their weekly shop. I think it's worth your while to save 40,000 on your mortgage.
That's a really good point. That's a really good point. But somehow people find it so painful. They're just not organised.
It is. There's a lot of documentation to it. I'm not going to say that it's an easy process.
Yeah.
But once you get it done, if you can save your money, it's worth your while.
I think that's a very good point. And I also think the fact that you are in a position to understand the different offers that banks have and make sense of it to the consumer, because 2% cashback sounds so appealing, and yet it's going to cost you maybe 20 grand over the term of your mortgage.
You will pay it back.
Yeah. Okay.
Banks don't give money for nothing.
Okay, so then just to summarise, if you're a first time buyer thinking about getting a mortgage, you need to get your repayment capacity absolutely up and running. You definitely should talk to a mortgage broker, e.g. Kieren, because he doesn't charge you anything and he'll tell you straight away if he can save you money. He's going to be able to compare, or he or she are going to be able to compare the different products and explain them to you. And they're going to tell you what other things you need to get underway, like paying off loans that you have already, or in any other way creating the right case for a bank.
If you're not going to buy in the next couple of months, or you're planning on buying in the next 12 months, I can sit you down now and set you up for an easier approval in 12 months.
Right. Yeah.
I can kind of sit down and go, okay, this is what you need to do, this is the amount you need to save, this is what you need to clear, this is what you need to, you need to reduce your credit card debt, you need to clear your personal loan. If you clear your personal loan, you qualify for A. If you don't, you qualify for B. I'll give you the levels that you will qualify for. And then your purchasing power.
Okay, great. Yeah. That would be a very useful conversation for people to have sooner rather than later.
It takes half an hour and I set it up, and I've done it for clients. They went away and 6 months later they bought the house that they wanted.
Right. Fantastic.
So that was it, and they were quite happy. I touch base with them every couple of months to make sure they're not going out. Yeah. Make sure they're not going on holidays. Make sure they're sitting at home and saving. And then it was easy. They got the house of their dreams.
Fantastic.
And they're happy out.
And finally, Kieren, just before we leave the first-time buyers section, can I just ask you, if your brother or sister was going to buy a house or planning to buy a house, what's the number one thing? What would you make sure they start doing?
Repayment capacity, i.e. you're currently renting or you're saving 12 to 1,300 a month. Mm-hmm. That's very important when the application is being processed.
Okay, for how long? How long would they need to?
Minimum about 6 months.
6 months, okay.
If you're renting and you're paying €1,000 and you're saving 300, that's repayment capacity of 1,300, and that could equate to 350 to 375 of a loan, which is a good level of repayment capacity proven. Any loans that you're paying at the moment that will be cleared prior to moving in, that also will count on repayment capacity.
Right.
But repayment capacity for first time buyers is a must.
Okay.
You definitely need it.
Okay.
That would be the priority, would be get that in place. Mm-hmm. Have obviously a certain level of savings in place. Be in your job more than 6 months.
Okay,
full-time
so
permanent,
more than 6 months, right.
Full-time permanent, not subject to probation. Mm-hmm. There's guidelines. The central bank have guidelines in place, but the main one really is repayment capacity.
Okay.
That would be the first one that you would address.
Okay.
The rest, if you're 3 months into the probation period, generally you can get a letter to sign off from your employer to sign off to say that you're going to be kept on after your probation period.
Okay.
And that would suffice.
Okay, great. And then in terms of life insurance and things like that, what?
That comes after they get approval.
Okay.
Once the approval comes into place, they find a suitable property. We go to loan offer. Before they draw down, they need to have life cover in place.
Okay.
Both lives need to be insured. It's in event of a death. Mm-hmm. So if one party dies, the mortgage is cleared, and there's different levels of life cover that they can get. There's a lot to it, so we can.
Okay, but do you sell it to them as well?
I sell that to them as well.
And do you also sell the home cover that?
Home cover. We have a business partner that deals with that.
Okay, great.
Brian Mullins Insurance.
Okay.
We contact them and they contact the clients.
All right, and then in terms of borrowing capacity, we hear 3.5 times, and then they have to have savings of 10%.
Yeah, 5 to 10%.
5 to 10%. Right.
If it's a new build, they'll get the Help to Buy scheme.
Okay.
Which will cover up to 5% of the purchase price. So
right.
sometimes that helps out
a
lot of people, but it needs to be a new build. If it's second hand, a lot of people would be getting a gift from their parents, parental gift. Yeah. That'll help, or else they come to the table with the full 10% saved.
And are there many exceptions? Like we hear about exceptions. Yeah. Is this a myth or is it reality?
No, it's each lender has their own separate criteria to exceptions.
Yeah.
Okay. You need to show higher repayment capacity, or you need to have, if you're going for 4.5 times, it's between 3.5 times. Anything above 3.5 times your income is an exception. Mm-hmm. There's also loan to value exceptions.
Okay.
If it's a loan to income exception, you need to have a certain amount left over of your net disposable income. They increase it. So each lender has a different criteria.
Right.
Case by case situation, but there is definitely exceptions out there to be
had. What are the options for people who want to trade down? They have their house, they possibly have a fair bit of equity in their house, they want to buy something, but they can't afford to finance a purchase until they've sold their own house. They don't really want to sell their own house until they've found somewhere they do want to buy, because they're a bit nervous. They're often a little bit older and not that keen to have that much uncertainty. So in the old days, I think it would have been a bridging loan they'd have gone for. Now, Kieren, what are their options?
Bridging loan comes up every now and again. As a bridging loan, there's no bridging loans available at the moment.
Okay.
But there's always ways of.
There are ways, are there?
Well, it's not straightforward. People trading down, If they're looking, they may need 10% of a loan to cover signing the contracts,
Okay.
and stuff like that.
Yes, yeah.
There's equity release.
Yeah.
Products available.
Yeah.
Lender by lender. It's different on each lender. It varies kind of thing how to do it, but it is available. Bridging loans are not.
Okay.
We can release money on the equity that you have in your current property to cover the 10% or 20% contract deposits.
Yeah.
But you just have to make sure that
your own sale goes through.
Yeah, that's the problem. There's not, like, majority of people that will downsize don't need a mortgage.
It's just they need to get the cash out of it.
Between selling and buying.
Yeah.
But when you work with vendors or estate agents and tell them this is the situation, arrangements can be made.
Right.
As such, like.
One arrangement I've seen people use is if they have their son or their daughter who